One more point, the Adani Group's total market capitalization since the time of Hindenburg's report coming out, it's halved. Effective today's fall. I just look at a data point on the Bloomberg and it did state that. So that's the kind of pain. Talk about what, few sessions, 7 sessions, and the group's
I think this is Jan 24 onwards. I think you take the fall
20,
and then you're talking about a 50% decline in market capitalization. That's been the brutality of this.
7 sessions odd. So.
A lot can happen, I guess, in 7 sessions. All right, but for the time being, we're going to move on and get a couple of corporate conversations going. Max Healthcare came out with numbers, and it was a good third quarter for the company. Revenue is up 12%. Margins also expanded to around 28%. Furthermore, the average revenue per occupied bed has improved for the company. But there is a marginal dip in occupancy, perhaps due to the festive season. Abhay Soy, Chairman and Managing Director at Max Healthcare, is with us. Abhay, good morning. Great to have you on the show. So just take us through some of the, the more granular trends, the slight dip in occupancy. Is this usual seasonality? And more importantly, what are the trends that you're now seeing, in the fourth quarter, especially with respect to things like medical tourism? Just some of the, headline trends that you're noticing that impact the top line.
Thank you so much for having me. So if I look at Q3 versus Q2, the second quarter typically is a quarter where you have seasonal diseases like dengue, other viral waterborne diseases, etc. So typically, the second quarter itself is characterized by higher than normal occupancies, and that's something we had even guided to last quarter, and you see that happening year on year. And the final quarter, the third quarter in any case is a holiday season. It's New Year's and Christmas, and that's time a lot of the surgeries, etc., get deferred. So typically, it has a lower sort of occupancy compared to, again, then sequentially, if you look at the fourth quarter, typically it's a higher occupancy quarter with higher ARPOBs, and you're back to normal. So typically, previously as well, year on year, you'll see the third quarter as the weaker quarter as far as both occupancy and ARPOBs are concerned. But I'm happy to sort of showcase that we've had the best EBITDA and a higher ARPOB as well, like you rightly pointed out. Now, when it comes to medical tourism, I think we are already back to 110% of pre-COVID levels. I mean, of course, much higher than last year, but then last year was impacted by COVID. So even compared to pre-COVID levels, we are beyond 110% of pre-COVID levels. This is in spite of, this is something which is very specific to Max, that 12% of our business used to come from Afghanistan. And because of the geopolitical reasons, because the government has sort of suspended visas over there, that business is down to not at present. And we're hoping in the next few quarters that'll bounce back again. But that should take us to even further numbers. Coupled with the Heal in India, Heal by India, push impetus provided by the government, I think it is going to augur very well for global medical and international medical tourism for Indian healthcare chains.
Right. Could you provide us, Abhay, good morning, with some guidance on what the contribution share would? I think we've spoken about this in the past, but given that you're already, as you said, 110% of what you were doing pre-COVID on the international patient front, where do you want to take that up as a percentage of the business? Because that is also highly profitable for you.
No, absolutely. And I think if we get our story right as a country, as an industry, I think, it's not very difficult to sell healthcare from India simply because, the huge value that Indian healthcare provides compared to an intrinsic value compared to anywhere else in the world, both in terms of skill sets as well as remarkably lower price points. We are the cheapest sort of healthcare providers in the world by a significant margin. I think we are now getting the India story right, putting India as a safe destination. I think the government is putting up the websites where, they would be credentialing hospitals and so on and so forth. Right now, we haven't even scratched the surface as far as global medical tourism is concerned. I think, there can be an exponential increase. Like you rightly pointed out, it is a high contribution and a high ARPOB business as well, simply because anybody traveling to India for medical tourism is coming for more fatal diseases, is coming for higher end quaternary care. So, average billing is much higher. So I think, once we get our act together, there can be an exponential increase in this business. Coupled with the fact that we are coming up with immense capacity over the next 3 to 4 years, I think in terms of percentage, it can go far higher. But again, we're also seeing a massive ramp up in other business as well.
Okay, Abhay, you kind of brought me to exactly my next question. And I think what Prashant asked, as a percentage of the revenue pie, where will medical tourism be? And what about Max at Home, the home care business as well as diagnostics? We're just trying to understand, let's say, if we're talking about FY24 and FY24, then how will the revenue pie look like?
So look, I think, we've stayed away from any sort of guidance as far as revenue and revenue pies are concerned in the past as well. So I'm going to avoid that question or duck it purposely. Max at Home is essentially home care business. What it means is providing a hospital at your doorsteps. So this is for long stay patients. We do dialysis at home. We do physiotherapy at home. We even set up intensive care units at home. And the usual providing nurses and doctors at home as well. This is an urban business. We are seeing huge traction in this. You've seen quarter on quarter and year on year increase as far as home care is concerned. Unfortunately, at present, it's not covered by insurance, and I think as and when it is, you'll see a major sort of drive in this business as well. Yet, I think organically, it's been growing at a very, very fast clip for us. When it comes to the laboratory business, I keep referring to this old advertisement by MRF, which used to be, the tires we race are the tires you buy. So our labs is something that all our 4,800 senior clinicians rely on. That is what we do in-house. The efficacy and efficiency of our labs, which are operational 24/7 within the hospitals, is right up there. And that is exactly what we take now in retail to people at home. And that's really our Max retail business. So when it comes to specialized tests and so on and so forth, the perception of having done it in hospitals, and given that the fact Max has an immense brand, we have huge traction over there. So you'll see, as far as even non-COVID is concerned, whether it's on a year-on-year basis or a quarter-on-quarter basis, we've been gaining market share.
All right, Abhay, it's a pleasure. Thank you very much for joining us and running us through all of that. Good luck to you. Now, Titan is the next company that we are speaking with. The revenues for Titan are up 14%, but there is a miss on the margin front. Third quarter EBITDA is also lower due to